Oy, oy, oy. Forgot to plug this thing in. That would be bad. Kill my battery on the live. Hello, hello. People are joining. Yay. Hey, Anya. Good morning. I'm just forgetting that I have to plug in my microphone. I mean my charger, not my microphone. Oh yeah. I haven't even looked at the stock market this morning. I hope it's not terrible. Here we go. It's terrible. Hey, thanks for the heart. Anya. What is going on? Miss T, good morning. Hello. It says more likes can attract more views, so keep it up. So if you guys want to hit that button, there's only 8 people in here right now. It'll help. It always seems to help when you guys hit that like in the first few minutes of the live. Anything after that, and I think it's too late. You know, I think it's one of those, like, you got to do it right at the beginning, and then we will get started. Once a couple more people join. Maybe no one's going to join. Maybe it's going to be one of those days where there's only 3 or 4 people in here the whole time. That's fine. I'm happy anyone's in here. How are you? Kind-hearted. Good morning. Curious, SPYI or QILD. If you already have an S&P 500 index fund in your portfolio, you know, then you don't need SPY-I as well. SPY-I does something where it's like a hybrid approach. I believe, or I could be wrong. I could be wrong. I know some of these covered call ETFs own a portion and they sell covered calls, so you generate you benefit from the stock market going up and from the covered calls. Others like QILD do not do that. They only sell covered calls. They do not buy investments. So there is still potential for it to go up, but it's not gonna go up at the same rate. So you can see last year QILD went up 7.5%, and the S&P 500 went up like 24%. So you don't need double S&P 500, which is why. So personally, I have QILD. Everybody says like, oh well, why do you have that one? Because if the market goes up, QILD doesn't benefit. Well, I don't care because I have the S&P 500 index fund, so I'm good. That's why I like QILD. I think JEPQ is one that goes up, you know, that does like a hybrid approach. So if you wanted to own the S&P 500 index fund and have covered calls and you wanted it all in one platform, well, I guess they're not an S&P 500 though. They're a NASDAQ 100. But you get the idea. I like the standalone because I feel like most people already have the S&P 500 in their portfolio. Stephen Ashmore, Stephen Ashmore, thank you for your comment. I appreciate it. Let's see what the headlines are here. It says, stocks fall on Tuesday as Wall Street resumes their 2024 slide. You know, it's going to be a busy year, I think. We got a lot going on. Ukraine, Russia, Israel, Gaza, China, tensions constantly. That always happens. An election. There's a lot going on. Oh, and rate cuts. The headline here says we're trying to figure out how many rate cuts we're going to have ahead of us in 2024. And you know what we all say is Wall Street doesn't like uncertainty. If Wall Street doesn't know what's going to happen, if the Fed doesn't come out and clearly state there will be 3, there will be 4, then Wall Street gets very nervous. Which one is quarterly? QILD isn't quarterly, they're monthly. Which one was quarterly? SPYI? No, I think all covered call index funds are monthly. I'm looking at them all. They're all monthly unless I misread something. Oh, VOO. Yeah, well, VOO isn't a covered call ETF, so they pay quarterly. Because most companies pay quarterly. The only companies that pay monthly dividends really are real estate investment trusts, because they're generating monthly income on their properties, and the way they're structured is that they have to hand out most of their profits through distributions like dividends. And so since most of their money is coming in monthly, they pass it out monthly. Hey, thank you for the rose. How would you move the TSP? I don't know what that is. What's the TSP? A thrift savings plan? I don't understand. How would you move the TSP? I don't understand the question. Thoughts on Coney. As Coinbase continues its volatility, because the reality is crypto is going to always, I feel like it's going to be pretty volatile for a while. It's just the nature of it. Like, if there's regulation, if there's not regulation, when is this Bitcoin ETF coming on the market? When is it not coming on the market? There's so many unknowns. It could be that all this volatility around crypto kind of backs off once the big hedge funds come in, because they'll control most of the stake. So once regulation comes in on crypto, once this Bitcoin ETF comes on the market and it's a little bit more stable instead of like the Wild West, Coinbase could pull back a little and become a little less volatile. That's the only concern I have with Coney. I see so many people putting their life savings into all of these covered call ETFs because the dividends look good now. These things can change. If markets become quiet for several years, you're going to have money in a depreciating asset because no one's going to buy these funds and they're going to sell their funds. So Coney's, the Amazons, the NVDA covered call ones, the TSLYs, they'll drop in value and the dividends will decrease. So you'll be sitting on a double loss. That's my concern for people who are loading up. Is there any monthly income on indexes in the Dow? I think SPY, let me look, hold on. I think, no. Which one is the one? I think it's SPHD pays monthly. It is a high dividend, low volatility S&P 500 ETF, SPHD. They pay a monthly dividend. What are your thoughts on Fro oil transportation? I've never heard of it. Is that Frontline? Yeah. Frontline has a dividend safety grade of B-. They pay a 13% dividend, which is insane. It has strong buys across the board. In the last 12 months, it went up 92%. In the last 5 years, it went up 248%. In the last decade, it went down 7%. But, more recently, the stock does very well. FRO, a really great dividend. It is currently $21, and it has a one-year price target of $27. That's a 24% move to the upside. The only thing that gives me a little bit of pause is that there's only 7 analysts covering the stock, and it's of the 7, it's kind of split. 0 sells, 3 holds, 4 buys. Hey, 338 people in here. Good morning to everyone who's watching the most must-see live on all of finance TikTok. My name is Kenneth. If you've never seen me before, you can read a little bit about me here. I ask a question. Please, if you ask a question, don't leave if I don't answer you right away. I try to give everyone their fair chance at having some time on their answer. So if you ask something, you don't have to spam it. You don't have to repost it 57 times. I'll see it. I scroll through. So right now there's 14 messages. I'm going to go all the way to the bottom and I'll work my way up till I get to Stephen Ashmore's What are your thoughts on Fro? Because I answered that one already. So here we go. I have 107 shares of TSLY. I may go to 110, but yeah, I'm going to cover 50. Good morning, Ken. Cup of coffee here for a little sit down. Hey, I got my iced coffee here too. I accidentally over milked it because I was running out of milk and I didn't want to just put a little bit of milk left in the fridge. So that's why it looks like that. Thoughts on QS? Oops. What did I hit? Quantum Scape. It is $9.36 per share. It's up 6% today, which is crazy. Let me look here and we'll take a look. QuantumScape is automotive parts and equipment. With a name like QuantumScape, that sounded very sci-fi to me. I thought it was going to be like something futuristic, not car parts. In the last year, it's up 48%. It hasn't been public for the last 5 years, but since going public in 2020, it's down 5%. Their grades aren't that great. D plus valuation, C for growth, profitability grade D minus. There's no dividend obviously because it's $9 a share. Maybe as a trade I like it, but as far as like an actual auto parts, I would go AutoZone or O'Reilly or one of the more established ones. This seems too high risk. It also has a 1-year price target of $5.84, so down 32%. It has a moderate sell rating from the analysts. The 1-year price targets are $5.84 on the average price, but it's already past that. $8 as the highest price target, but it's already past that. With something that used to be a penny stock and has so many downgrades and bad grades, I would be in wait and see mode. And if I really wanted to buy it, I'd only put in what I was willing to lose. Do you like any farm or farm product companies? I like John Deere, but I don't own it. John Deere has a dividend safety grade of A-, which is fantastic. Outside of that, I don't really pay too much attention to the farm stocks, although I probably should. I'm thinking I know Moo. It sounds funny, but Moo is an agriculture ETF. That's a very popular one these days. What else are there? Let me see. I think DBA and Veggie, VEGI, are other farm and agriculture ETFs. Veggie looks okay. It's up 38% in the last 10 years. I just moved to the US. Is there any way to sell USDT and get USD into my bank account? I have no idea. I would talk to your bank. I'm doing covered calls at 50. I'd personally do 50, not 100. Honestly, TSL is not doing so well, I know. Thoughts on YORW? YORW. The York Water Company. In the last 12 months, it's down 17%. In the last 5 years, it's up 18%, which is not great. In the last 10 years, it's up 76%, which is fine. It has a dividend of 2.26%. It has a dividend safety grade of B-, which is fine. They've got 27 years of dividend growth, which is great. I don't know. Their grades are kind of all over the map. Valuation D-, growth B, profitability F, momentum D-. Their 1-year price target is... wrong one. York Water. There isn't a 1-year price target. There's no analyst covering the stock. That gives me pause. I would be nervous. Where do you start recommending paying down debt? Highest first. If you've got an interest rate, student loans that are 17% or medical bills that are 10 or 12% interest, those have got to be first that get paid off. You can also look into credit card balance transfers to go to a different credit card that has 0% for a period of time. That'll buy you some time. And then live the most below your means that you can possibly live. Hey, Kindhearted, thank you for subscribing back to the Subscriber Live. $6 a month, you can't beat it. It's cheaper than Netflix. Live below your means. This is for user 619. Live below your means as much as you possibly can. Pay off your debt. Be as aggressive as you can. If that means move back in with your parents, or get a roommate, or start walking dogs for Rover, or driving for Lyft, whatever you have to do, you do it. All right, we have all caught up. AMC is dead? I don't know. AMC, to me, has always been more of a good stock to trade than a good stock to invest in. It was oversold a few days ago at $5.08. The very next day, it jumped to $5.44. So if you bought a couple thousand shares, you'd make a pretty good trade in a day or two. As a long-term investment, I don't see it. People were so silly in the last year or so when all these new movies were coming out. It was Barbie is saving AMC, Oppenheimer is saving AMC. No, it isn't. It's temporary. these movies aren't going to be playing in theaters in perpetuity. They're going to be playing in theaters for a month, and then they're out. What's next? Taylor Swift? You know, this headline of this person or this movie is going to save AMC is a little naive, because movies are only there for a little bit of time. They have to do something to get people back in the theaters. And, I don't know. I mean, I think a company's going to end up buying AMC. I've been saying this forever. I think we're going to see Amazon, Apple, Netflix, Disney. One of these companies will come in. AMC's market cap is $1.3 billion. Apple is a $2.9 trillion company. This would cost them literally nothing, and they could put their Apple movies in and keep their name out there and rename it, instead of American Movie Classics, it could be Apple Movie Classics. I mean, there's something that Amazon could do the same thing. Amazon Movie Classics or some shit. I don't know. One of these companies could come in and buy this for pennies. I mean, it would cost them literally nothing. Amazon has a market cap of $1.5 trillion. Bots. Bots is a great ETF for robotics and artificial intelligence. Last year was up 21%. In the last 5 years, it's up 58%. That's a garbage truck that you hear squeaking in the background, and it's very annoying. Sorry about that. They're going to start slamming those dumpsters right about now. Bots is up 81% since going public in 2016. It has a pretty high expense ratio of 0.69. Anything under 1 is generally considered low. So theirs is still low, but it's high. They pay a dividend, but it's nothing. It's 0.21%. Their grades are terrible. Expenses, D+, that's the fee. Dividends, F. Risk, D. Momentum, C+. What I would personally do, I can't give financial advice, but what I would personally do is I would comb through their top 10 holdings and see which ones stood out to me, and then I would consider making individual investments in those companies instead of the ETF on a whole, because their top holdings are NVIDIA and Intuitive Surgical, which are great. They have 48 holdings in total. NVIDIA and Intuitive Surgical cannot carry this ETF. All these other 46 companies could drag the performance down, unless the majority of those 48 companies did really, really well. Then the fund would go up, but that's kind of a gamble. Could you look up Halo for me? Halozyme Therapeutics. By the way, for everyone who's in here, if you ask a question, don't leave. I'm going to get to everyone eventually. Halozyme Therapeutics is $35 a share. It's got 3 strong buy ratings. It's got a valuation grade of D+, which means that it's a little overvalued. Their growth comes in at an A-, which is very good. Profitability, A+. Momentum, C. And revisions, A-. It's biotechnology. In the last 12 months, the stock is down 35%, which is ouch. But in the last 5 years, it's up 133%. In the last 10 years, it's up 107%. They have a 1-year price target. I will read to you when it pops up on my screen. Here we go. It's $35 a share. According to 6 analysts out of 9, there are 9 analysts covering the stock total. There's a 1-year price target of $51.63. That would be a 45% move to the upside for this company. We know that analysts are right about 30% of the time, so don't take their word as gospel. It's not a guarantee just because some analyst comes out and says it'll be $51.63, that it'll be $51.63. The highest price target is 72. The lowest from the one analyst who has a sell order is 28. AutoZone, this is from Free Spirited Adventure. AutoZone is a great stock and leads the market on shares repurchased. They have done it every year. Good to know. QS is a solid state battery company. Gotcha. What companies have you been thinking about buying or selling? Okay, I didn't know that about the QS company. It says on Seeking Alpha's industry and sector that it is an automotive parts and equipment company. So that's why I compared it to AutoZone. But it's good to know that it is just a battery company, but still in that sector. What companies have you been thinking about buying or selling? There are a few dividend companies that I have on my list Dollar General, not Enphase. Well, I want to buy Enphase. I think I might buy it this year. I also want to buy. I got my list here. Dollar General has been on my list. Sorry, I'm looking away from the camera. You might not be able to hear me. Dollar General. I want to add more to my Altria position. I want to add more to Realty Income. I want to add more to covered call ETFs. Let's see. What else? John Deere has been on my list for a while. Caterpillar, stuff like that. I've already got a large tech holding. My portfolio is very heavily invested in tech. This is the year for me that I'll be adding more to my dividend investments instead. Baba Booyah says, good morning. Do you think the Iron Claw is getting any Oscar nominations? Yes. Honestly, the only thing that will take away from that movie in terms of being viewed as like a very serious film is Ric Flair. That impression, if you've seen the movie, is one of the worst things I've ever seen in a movie in my entire life. My mom and girlfriend and I all saw it on Christmas or around Christmas. My mom and my girlfriend are not pro wrestling fans. They know it loosely because of me. And when the Ric Flair character came on, they both turned and looked at me like, what the hell is that? That's how bad it was. They even my mom and my girlfriend know Ric Flair. And they know that is the worst bit of acting. I mean, that takes so much away from the film for me. I walked out, all I could think about was that Ric Flair. But yes, I still think the movie will, and I still think Zach will get a nomination. He was excellent. EV batteries. VOO for 2024, it doesn't matter. You're not buying VOO for this year or next year. You're buying it for the next 30 years. So don't worry what you think will happen. It doesn't matter. You know, it always goes up long term. And if it doesn't go up long term, we've got much bigger problems than the state of the economy or the stock market. You know what I mean? This fund has always and will always go up long term. There will be pullbacks. Maybe it's this year. I don't know. You don't know. You don't want to sit on the sidelines, though, because you could miss out. So if you wanted to buy VOO or an index fund, any S&P 500 index fund, and you were nervous that you thought there was going to be a recession, you could be wrong. And you could sit out and miss, like we saw last year, a 22% return. So the best thing to do is slow and steady, little at a time. And if you're new to investing, consider it like a hybrid approach. Like what I would do is lump sum half. So if I wanted 100 shares, I know VOO is a bad example because it's $434 a share. But if I wanted 100 shares, just as an example, I would go 50. I'd buy 50 right now. Start off with a medium-sized swing of the bat. After that, if I could afford it. If you can't afford it, then you go dollar cost average as much as you can afford every month. But what I would do, and I own SPLG instead of VOO because it's cheaper, I would go with, if I wanted 100 shares, I'd buy 50 right now. I don't care. I don't care what it does. It could drop 3%, 5% in the next 2 days. It doesn't matter to me because I'm holding it for the next 30 years. After it drops, and if it drops, I'll buy more. If it goes up, I'll buy more. It doesn't matter. I'm going to just keep investing every month forever. So I don't worry. Do you own any coffee companies? No, I don't. I used to own Starbucks a long time ago, but it was kind of whatever, so I sold it. And I didn't own, but I traded Luckin Coffee, if you remember that one, it was the Chinese Starbucks, and they were expanding rapidly, and there were going to be more Luckin Coffees than Starbucks in a few years, and it turned out that they faked everything. They lied about it all. The stock lost a tremendous amount of value. Luckily for me, though, I was only trading it, so when it started to pull back, I cut my losses and I moved on. Tyson Foods, let's see, Tyson, TSN, it is $55 a share. The stock is down 16% in the last year. Let's see here. They have a dividend of 3.57%, which is good. In the last 5 years, the stock is down 3%. In the last 10 years, it's only up 57%. I feel like there's probably better investments, unless you were just investing in this one for the dividend and like modest growth, which is what you'd get. They have a dividend safety grade of B, which is very good. They've grown their dividend 8.64% in the last 5 years. They've got 12 years of total dividend growth. But, you know, it's not It's not a big mover. It's down 16%. This is a company that I believe will probably always be fine long term. So getting it down 16.5% could be a buying opportunity and could give you a chance to get a 3.5% dividend on top of that. Fed cuts on Thursday. Your guess is as good as mine. Neo, your username is Neo, and your question is, Neo, I don't own Neo. I don't really invest in a lot of Chinese companies to begin with. I would rather just stick with the ones that are here at home. Neo has bad grades across the board. Valuation, D+. Growth, C. Profitability, F. Momentum, D. Revisions, C+. Despite that, it still has buy ratings from Wall Street and from Seeking Alpha's own analysts. The stock is down 28% in the last 12 months. It is up 15% in the last 5 years. And since going public in 2018, it's down 10%. It's a roll of the dice for me. I would only put in what I was willing to lose. Okay, caught up. Now I'm going to go to the bottom again. Home Depot. Big fan of Home Depot. Big fan of Clorox as well. I saw that in the above comment. Sorry, I've got a little itchy nose here this morning. Home Depot has a dividend safety grade of C, which is not great, but they've got 14 years of dividend growth. In the last 12 months, it's up 9%. In the last 5 years, it's up 95%. In the last 10 years, it's up 328%. The other one above that was Clorox, which is CLX. Clorox is $3. They have a dividend of 3.37, which is fine. They have a dividend safety grade of B+. They've got 46 years of dividend growth. You'll remember Walgreens has just cut their dividend by 48%. If they were able to raise their dividend for just 3 more years, they would have become a dividend king. That's a really unfortunate for them that they had to cut back on their dividend, because that's an elite group of dividend kings, that are companies that have raised their dividend consistently for 50 years, and now it's over for them. They're cutting their dividend. That means their quest to become a dividend king starts over. Now they have another 50 years to go of dividend raises, so most of us will probably be dead by then, unfortunately. So that's a bummer. But Clorox, so the reason I mentioned Walgreens is because they had 47 years of dividend growth, but they have a dividend safety grade of D. Clorox has 46 years of dividend growth, but a dividend safety grade of B+, which is great. Gives me a little bit more peace of mind. However, as an investment, you're really in the stock for the dividend. Because in the last 5 years, the stock went down 6%, and in the last 10 years, it's only gone up 57%. Paramount stock, and then I see Rick Gilbert, Paramount. I don't know. I feel like these streaming service apps are getting a little carried away. Too much competition. Paramount is, now there's Paramount. I feel like every time I turn on the TV, there's a new streaming service. And it's like, come on, we can't subscribe to all of these. We're going to pick the big ones. We're going to pick the Netflix, the HBO, we're going to pick the big ones. Not everyone is going to have every streaming service, especially if the shows are whatever. Paramount is down 70% in the last 5 years. It's down 76% in the last 10 years. It's down 26% last year. Wouldn't touch it. What are your thoughts on a Bitcoin ETF? I'm happy for it. It adds more credibility to Bitcoin. For the longest time, when you put on the news, they would say, "Oh, Bitcoin, it's a scam. What's Bitcoin? Who knows what this thing is? It needs to go away. It needs to be regulated. We need to ban it. Blah blah blah." Now it looks like it's here to stay. For all the people who said, "I don't know about this Bitcoin thing," now that they see that the big hedge funds are getting into it, it adds a little more credibility for the people who were on the fence about it. For the younger people who already own a lot of Bitcoin, they'll benefit. Although I could imagine Bitcoin maybe levels off. I don't know if it'll have the big, huge gains now that big Wall Street is getting in, because they're going to control probably a majority of the stake of the Bitcoin. They're just going to buy up as much of it as they can. I could be wrong. Don't quote me. But I still think maybe it pulls back on the volatility a little bit, but maybe it becomes more of a safer investment now that the big money is getting in. But of course, they can change their minds like that and dump their positions. We've seen it happen with other companies that are not crypto. All said, I think it's good news. Time in the market is better than trying to time the market. Yes. QQQ is an investment for kids that are now 11 years old. Yes. QQQ is great. I can't give financial advice, so I can't tell you, yes, go buy QQQ. You might also want to just consider QQQM, which is the exact same thing, but it has a slightly lower expense ratio, and it's about half the price. It comes in at $166 per share. Everything is the same. It is the exact same. QQQ, QQQM, they hold the same positions, they hold the same investments, they have the same growth. I think they pay roughly the same dividend. Let me double check. So QQQM pays 0.66, QQQ pays 0.57. So roughly the same dividend, roughly the same growth. The only real difference is that QQQ has a more robust options chain. So if you want to trade options, then you would go with QQQ, or if you wanted to sell covered calls or stuff like that, QQQM, exact same thing, half the price, but it's heavily invested in tech. So I think, let's see, 49% of their holdings are in technology companies, which makes this one great for little kids because tech does really, really well, but it can also be a little volatile. So starting a large position in a tech-based portfolio when you're 75 and gearing up for retirement or have been retired, a little risky, because if there's a recession, the tech stocks usually are the ones that drop the hardest. But for an 11-year-old, if there's a recession when they're 15, for you as their parent, it's a tremendous buying opportunity. You just go in and buy as much as you can because it'll recover and they'll reap the benefits of buying it at the discounted price. So yes, absolutely, I love covered call ETFs. I love tech-based ETFs for kids. If you wanted to do that, I think it's a great idea. I had VOO for 4 or 5 years, been absolutely happy with it. I love it. Kenneth, thoughts on Andre the Giant? As a wrestler, fantastic. Andre was at the time, there was nobody like him. Now, there's a lot of big guys in wrestling. There's the Big Show, there's Omos. I'm sure there's there's like the Great Khali a couple of years ago. So we ended up seeing this like surge of giants in wrestling. But at the time, Andre, oh my God, one of a kind. Yeah. Oh. How about Clorox? We talked about Clorox. I hope you heard the answer. What's your opinion on TLT? Can it reach 100 by the end of the year? I don't know, because I don't really pay too much attention to treasury bonds. Generally, I view treasury bonds as something for retirees, older people who've already made their money. So that's not me. I have no interest in bonds. I have no interest in treasuries. I would only put my money in bonds or treasuries if I was old and had already made a lot of money, or if I wanted a somewhat safer investment to earn a little bit of extra income on the side, because I was planning on like purchasing a house or something and I didn't want to put it in something more volatile like the stock market. However, TLT was down 8.5% or thereabouts last year. So I don't know. It's not for me. SPYI for your 401k, I think it's fine. It'll generate some income. SPYI also does like a hybrid approach, I believe, where they also invest. They don't just sell the covered calls, but I could be wrong. Investing in a portfolio of stocks that make up the S&P 500 and a call option strategy. So they do a little of both. But they haven't done that great. I mean, in the last, when did they go public? They went public in September of 2022. It was up 3.3% in the last year. It pays a good dividend, but you have to keep in mind that the covered call dividends will fluctuate based on market volatility. So don't guarantee this 11.99% dividend. There will be months when it's higher, months when it's lower, based on how volatile the stock market is. My garbage truck came through at 6:30. Yeah, well, our guys got here a little late. And speaking of garbage, BK Rosser says, do you have any garbage or recycling companies you like? Yes, Waste Management is great. Waste Management was another company that was on my list a few years ago that I regrettably did not buy. In the last 5 years, it's up 93%. It has a dividend of 1.57. So, the dividend is not fantastic, but it has a dividend safety grade of A. And, it's trash. People are always going to need their trash picked up. Sorry for so many questions. Are there any ETFs that have IBM in it? I would almost guarantee that most do. I don't know if it's in any of the top 10 holdings. Let's see. VGT. VGT is the Vanguard Information Technology Fund. And IBM is not in their top 10 holdings. I'm sure it is in some top 10 holdings, but I would also guarantee you that it is in a lot of their portfolios in general. It's just not in their top 10. Hey, the beard is filling in pretty well. Yes. If you were here on Monday, look, this is what I get for being frugal. I get it from my mom. This is what I get for being frugal. I'll always look for the cheaper option, even if it's not better. So I needed a new beard trimmer or clipper or whatever a couple years ago. There was one that was like $60 that looked okay, and then there was one that was $29. I got the $29 one. It's junk, and the guard occasionally, just randomly, will pop off, and I'll be trying to clean up, and the guard flies off, and bzz, and that happened to me on Sunday morning or on Monday. It happened maybe yesterday or Saturday night. I don't remember when it happened. A few days ago, early in the morning, I woke up like an idiot and I was like, oh, I'm awake. I haven't even had my coffee yet. I'm going to trim my beard. And the guard wasn't on securely, popped right off, and I took a whole chunk. It's filling in though. You can see a little bit here. That's why I'm leaning a little bit back on this live today. And yesterday my live was on this side, so you were looking at this side of my face. And of course, what did I do? I learned my lesson, and I went and I got the most expensive beard clipper I could find on the market. Not only the most expensive, I think usually most expensive doesn't guarantee quality just because it's expensive, but this one happened to be one of the more expensive ones. It was like $160. But it's one of the highest rated ones. And this guy, Matty Conrad on YouTube, he's like a barber. It's what he recommends and it's what he uses. So I was like, if it's good enough for him, I'm going to buy it. And it'll probably last me forever. So, it's an investment. But I was pissed. Okay, caught up on all that stuff. Let's go to the bottom. Personally, I like Allied Waste. Wonder if they have a stock. Let's take a look. Allied Waste. It appears as if they do not. But maybe Allied Waste Services. Let's see who owns them. They might be owned by. So they are owned by. Republic Services. It looks like they're owned by a company called subsidiaries. It looks like they might be owned by Republic Services. It says successor. I don't know what that means. I don't know if they used to be something else, but they might be owned by Republic Services. CLM, let's take a look at CLM. CLM is Cornerstone Strategic Value Fund. It's got an 18% dividend. In the last 5 years, it's down 37%. In the last 10 years, it's down 72%. In the last 1 year, it is down 8.5%. I don't get this one. It's got an expense ratio. Its expense ratio is 2.01%. 2.01% is absurd. Not only to mention that this fund is down 70% in the last 10 years, 38% in the last 5 years, 8.5% in the last 12 months. They've cut their dividend by 12.3% in the last 5 years, and they have a 2.01% expense ratio. Is insane. Hard pass for me. PSLY is very fishy. I like it, but it depends on It's a small part of my portfolio because it depends on the on the volatility of Tesla. And if Tesla becomes less volatile as there becomes more competition, TSLY will drop in value because less people will want to buy it, and the premiums that they sell will become less lucrative because it'll just be cheaper to go and buy the stock. The reason people like TSLY right now is because Tesla keeps going higher and higher and higher and higher. So they buy these covered calls, which gives them the right to buy Tesla at the previous, at the price that they agreed upon earlier. So Tesla could be $200 a share, and they buy a covered call, and then Tesla goes to 275. Well, that person can come in and say, well, I had my call at $200, so I get to buy your shares at $200, even though it's 275 now. But if Tesla becomes less volatile, which it could do over time, those premiums drop in price. It's something to definitely be concerned about. I think TSLI will always pay a dividend because that's the nature of the fund, but that dividend yield will drop over time if Tesla isn't volatile in the future. The Vorso twins, Russell, they're the Da Vinci meme. I don't know who they are. Voros twins wrestling. Oh, these guys wrestle? Are you kidding? I've seen these guys. That's hilarious. I didn't know they were wrestlers. Not financial advice. This is wrestling advice. Damn right. Don't trade stocks. Become a pro wrestler. That's funny. Opinions on NVIDIA. They're going to be around forever. They're the global leader. They're the ones that people look to for their semiconductors, first and foremost. I think NVIDIA has a very long road ahead of them. It's entirely possible. Remember, this is a stock that went up 230-something% last year. It's very unlikely that it will continue to go up 235% every single year. I think NVIDIA still could go up a little this year. We've seen it already at the very beginning of the year. Year to date, NVIDIA is up 5.8% just since January when the market started trading for 2024. It's already up. It was $495. This morning it's $524. The question is, if you keep missing out on this, do you think it goes higher? You can sit on the sidelines and go, oh, I should have bought it when it was 3. I should have bought it when it was 4. I should have bought it when it was 5. If you think it's going to keep going higher, why didn't you? I know part of the reason is, this is how I feel as well, it gets more expensive. How many shares can you buy? This is why people ask me if I buy Costco. And I say, I love Costco, but I don't own it. Because how many shares can I realistically buy? 10? How long will it take for me to have a substantial return on my investment? 10 years? For me, if I were to buy 10 shares of Costco or 10 shares of NVIDIA, it would cost me $5,000. I could put that money into something else and benefit a little bit more or have a higher return. My money could go further is what I'm trying to say. Jay King says, be super careful with them. I'm serious. Jay King, I'm serious too. I agree with you. Thank you for the QQQ and QQM explanation. You're very welcome. Someone else, user572, also on my Instagram account, which, by the way, if you haven't followed me on Instagram, something crazy is happening over there. Last month, I had 2,800 followers. 2,800. I've been on Instagram for 5 years. I cannot grow on Instagram. Last month, I reposted this old McDonald's video that I've posted a couple times here on TikTok. It's an old video. It's over 2 years old. I reposted it on Instagram. 2 million views. And I've gone from 2,800 to almost 40,000 on Instagram. So you could definitely say that I've shifted my focus to Instagram. I have better views on Instagram, better retention, more questions on Instagram lately. More people are watching my videos on Instagram versus TikTok. Not only that, but TikTok keeps suppressing my videos or putting them under review. I've had 2 videos in the last 3 days that were halted for 2 days under review. And then when they finally get approved and they're posted, they're dead. They have like 300 or 400 views. So I'm definitely focusing my shift to Instagram, but I'm continuing to do the lives here. just because that's where the larger fan base is at the moment. But anyway, someone else, the point to this is, somebody asked me what the difference was between QQQ, QQQM, and QQQY was this morning on Instagram. QQQY is just their covered call ETF. QQQM has a slightly higher management fee. Yes, it does. Why do you like Dollar General over Dollar Tree? Because, let me pull up both. Oops. I like Dollar General more than Dollar Tree because in the last year, Dollar General went down 44% for what I view as a short-term problem and overreaction. They had some theft, they had some mismanagement. They were running into this problem where they were ordering too much inventory and it wasn't moving, so it looked bad. It hurt their earnings. The stock got hammered, 44% down. To me, for a company that is going to be around probably forever, or at least forever in our lifetime, what an opportunity. So I have Dollar General on my wish list for 2024. To be able to get it down 44%, it's almost half. It's almost half off. Like if there were a pair of shoes that you loved, and they were $100 and they were running a sale and they were 44% off, would you not run to buy those shoes? They have a dividend safety grade of A. They've got 6 years of dividend growth. They've grown their dividend 15% in the last 5 years. Dollar Tree is fine. But I like Dollar Tree as well, but I just like the fact that the Dollar General has gotten hammered so much. What's the best way to invest if you have $1 million? Luckily for you, I have an answer for that question. Go watch the playlist, which is the very first playlist you'll probably see on my homepage. When you click on my page, it'll take you to my homepage. There's a playlist that says how to invest by the amount, and there's a video on how I would invest with $1 million. You can go watch it and then come back and tell me what you thought. Disney is on sale right now as well. I never applaud anyone, but you sound solid. Thank you so much. That means the world to me. I try to be as honest and straightforward as I can be. The difference, this is for Tom. I hope you're still in here. The difference between VOO and SPY. VOO is SPY. VOO is an S&P 500 index fund. It invests in the entirety of the S&P 500, which is like 506 or 504 companies. SPYI invests in covered call ETFs based on the SPY on the S&P 500 as well. But they're generating their income through covered calls. Their dividend is a lot higher. Their performance could be capped because of these covered calls that they're selling. So that's the difference. They are not the same. VOO and SPY and SPLG are the same. They're S&P 500 index funds. They all do the exact same thing. They all invest in the same companies. They all have the same returns. They all have roughly the same dividend. They all have the same growth. Comparing an S&P 500 index fund to an S&P 500 covered call ETF are two drastically different things. What about low? Lowe's in the last 12 months was up 8.6%. In the last 5 years was up 121%. In the last 10 years was up 355%, which is massive. They have a dividend. It's 2%. Their dividend is fine. However, Lowe's has a dividend safety grade of D+. Not great. We just saw Walgreens, who had a dividend safety grade of D, cut their dividend. If Lowe's were to cut their dividend, they would be erasing 60 years of dividend growth. Well, not erasing, but they would be putting an end to 60 years. 60 years is a hell of a track record. They would love to probably keep that up. I would think Lowe's would hate to cut their dividend. They have a dividend safety grade of D+, though, so they gotta improve their profit margins, or their growth or something. So maybe it's their cash. Maybe they're running out of cash. I don't know. But they've got to do something to get that number up so they don't cut their dividend, because that would be very unfortunate for them. Where is my TipRanks website? I closed it. Let's see what the 1 year price target is on Lowe's. It's up 6%. They have a 1-year price target of 229, which would be around a 5.75% upside. There are 24 analysts covering lows, 0 sells, 11 holds, 13 buys. Paramount we've talked about, and maybe that was a question I already answered. Great advice, Ken. Thank you for all you do. I like you, and keep it real. Thank you. Jeff, thank you so much. I'm personally keeping mine, but not getting more. I don't know what that was in relation to. Sorry. Home Depot, we already answered. Clorox, we already answered. I think I'm all caught up. Let's go to the bottom now. Dollar General, we just talked about it. What software are you using? I am using Seeking Alpha, and I am using MarketWatch, and I am using TipRanks. It says down here at the bottom, ask me about my guide. If you go to my website, it is just my name. It's kennethsuna.com. It's my first name and my last name. Click on the menu. The menu will be up here, or it'll be down here. If you're on your phone, it'll be down here. If you're on your computer, it'll be up here. Click on the menu. It has my free resource guide with all the websites that I use to do my own research. And it's totally free. I'm not like these other creators who say, click on my website to get my free link. And then you go on the website and it's like, put in your email. I'm not going to bombard you with emails. I'm not going to try to sell you a book or a course or one-on-ones. Just go on the website. It's totally free. And I'm also adding a third template. So on my website right now, I have a couple different templates. One template is my free, one isn't the template, it's just the guide, the free resource guide with links to everything. The second is a template. It's a fundamental analysis template that has two side by side so you can compare stocks, because sometimes people will say, which is better, Coke or Pepsi? Well, now you can run your own research and make your own little templates. It's all clickable, it's all fillable. The next one that I'm working on, which will be up hopefully sometime this week, is a ETF comparison template. I think, this is from Luis, I think VGT is better than QQQ. Entirely your call to make. That's the cool thing about investing, is you can make it personal to you. They're similar but different. So VGT is investing in 100% technology stocks. Well, 99.43%. 99.43% of their holdings in VGT are tech. Tech usually has higher returns in bull markets or over the long term. VGT is up 424% in the last 10 years. QQQ in the last 10 years is up 361%. So you're right. VGT has better performance. For people who want a little bit more diversity in their portfolio, a little bit more, maybe they like QQQ because it gives them an overweight position in tech. It's 49% tech. But they want some diversity in their portfolio, then they might go with QQQ. For someone who has an S&P 500 index fund for the diversity and they want a separate investment to be tech focused, VGT, great choice. VUG is another one. I think they are heavily in tech as well. It's the Vanguard Growth Fund. Let's see here. They are 46% tech, so I think VUG would be a better comparison to QQQ than to VGT. Pair of shoes, I just want down 70%, so I'm getting them. Hell yeah. With that said, now I'll probably get Instagram. Can you do a quick review of Republic, the waste one that we were talking about? It's Republic Services. The symbol is RSG. It is year to date. Oh, well, no, forget that because the year just started. In the last 12 months, it's up 28%. In the last 5 years, it's up 122%. In the last 10 years, it's up a massive 409%. They have a dividend of 1.3%. So you're not really buying Republic Services for their tremendous dividend. You're really getting it for the prospect of high growth. Remember, just because it went up 409% in the last decade doesn't guarantee that it'll go up 409% in the next decade, but it gives us a good idea. They have a dividend safety grade of A-, which is great. 20 years of dividend growth. Let's see here. As expected, well, I don't know. Here, you tell me what you think. Let's do a little camera flip here. This is their revenue over the last, since 2018. So 10 billion, 10.3 billion, 10.15. So it's kind of flat. Then in 2021, 11.3 billion, In 2022, 13.51 billion, so a big jump. And now it looks like things are turning around for them. This company that had relatively flat revenue over the last couple of years now seems to be getting more and more growth. Their estimate for 2023, so they'd be going from 2022 of 13.5 billion in revenue to an estimate of 14.87 for the year of 2023, and then for this current year, they're estimated to pull in 15.8 billion in revenue. Pretty strong numbers for this waste management company, and you can see here over the last 10 years, up 409%. Let's go here, RSG. This is Tip Ranks. It's currently 164, and they have a moderate buy rating with a 1-year price target average of 169. But the highest price target is 187, and the lowest is down here at 155. However, there are no sell orders on this company, so I think this 155 was just a higher price target that they've now passed, and it hasn't been changed. So it reflects like it's a low price target. But there aren't any sell orders on this company. It's got 7 holds, 8 buys, 15 analysts covering it, with an average 1-year price target of 169. Add in an okay dividend of 1.3% with 20 years of dividend growth, and they've grown their dividend let me make this a little bigger for you guys, 7.42% in the last 5 years with an A- dividend safety grade. I like this company. I like trash. Trash is always we're always going to have it. Do you like candy companies? I like to eat candy. Seth the Snowman. I got to learn more. Always been interested in investing. Seth, you're in the right place, man. Do you have a significant other? Yes, I do. Her name is Sarah. We're going to the gym in 4 minutes. So right when this live is over, we're out of here. Is it good to have both VTI and VOO? I'm not a real fan of VT. Let me see, which one is this? Their returns are almost identical, so I feel like pick one or the other. I personally like S&P 500 index funds more. The total market funds, they underperform VOO by about 10% over the last 10 years. It's because VOO has 504 companies and Vanguard Total Stock Market has 3,700. So some people look at it and go, oh, I can own everything. Great. But really owning everything means that there's a lot of losers there that will drag down the performance. Like we've seen, it's down 10% compared to VOO. And there's so much overlap because the 504 companies in VOO are going to also be in VTI. I personally would only pick one or the other. And then I would use the money from having, if you had 2 and you sold 1, that money frees you up to then go and buy a different ETF, like something tech-based, like VGT, or something dividend-based, like SCHD, or something real estate, like Realty Income. So for me, it's all about diversity. And with this, there's too much overlap. All right, to the bottom we go. Coca-Cola is always going to be great. I don't know. I'm sorry. This one is for Mantino says, what do you think about IUIT for Europeans? I don't know what that is. I'm sorry. The ticker symbol for the trash one is RSG for Republic Services. RSG. For Europeans is IUIT. IUIT. I'm sorry. I've never heard of this. IUIT. I don't know what that is. I'm sorry. Do you think Apple is going to go lower? Should I wait? I am not a fan of waiting ever. I bought more Apple. Earlier in the week when it was 181. If it drops to 169, just making that number up. But if it drops to 169, I'll buy more. And if it goes up to 200, I'll buy more. It doesn't matter to me. I'm always buying and adding to Apple. I don't want to wait. When you wait, you miss opportunities. You know, let's say it was 200 and you said, oh, I'll wait for it to go to 180. Then it gets to 180 and you go, ooh, I don't know. Now it's 180. What if it goes lower? So you wait. Well, if it's at 180, maybe it'll get to 160. Oh, wait. And then it goes to 220 and you're like, damn it. You know, so there's all these scenarios that can happen. Maybe it was 200 and you said, I'll wait for it to get to 180 and then it goes to 220. You know, you never know with the stock market. So the people who sit on the sidelines waiting are the ones who miss the opportunities to start investing. So I don't like doing that. Any thoughts on Celsius? Celsius had a massive run over the last 10 years. If you have ever actually I want to make this video, the comparison of hold on, I gotta write this down. The thing about these energy drinks is that there's always a new one. Every couple of years, you know, there was Red Bull, and then there was Monster, and then there was Rockstar, and then there was Bang. Last year, everyone was obsessed with Bang. Now it's Celsius. In 2 years, Celsius is going to be done, and there's going to be a different energy drink on the market that all the college kids obsess over. I just told you my girlfriend and I were going to the gym right now. It's full of college kids. They walk in, they go right to the fridge, they grab a Celsius, and then they go and they scan in and work out. The Bang, 2 years ago, they were all grabbing Bang energy drinks. Now Bang is stacked on the shelves because nobody wants it. Everyone's grabbing Celsius. In 2 years, Celsius is going to be over, and there's going to be a different one. So I would be cautious about investing in a company that's already up. Listen to their 10-year growth. Celsius in the last 10 years is up 48,000%. In the last 5 years, it's up 4,700%. In the last year, it's up 85%. I worry that this is going to be the next one that gets replaced, and then everyone forgets about Celsius. The comparison that I was going to make, which is what I wrote down, is those cups, right? There's always a new cup. There's Hydro Flask. There's Turvist. There's the Yeti cup. Now there's Stanley. This is how energy drinks go too. All right, everybody. I got to wrap this up. I'm seeing some questions coming in. Ranjit says, "How not to be crude, but how much have you made?" I don't share that. I'm sorry. I'm never going to share how much money I have or how much I've made. Jeppy, you can check my covered call ETF. I've got a whole playlist on it. I saw someone asking about the cruise lines. I like them, but the cruise lines are going to have to do something to modernize and make it more youthful. Because if you go on the cruises now, it's full of 80-year-olds on walkers and wheelchairs going to the casino, smoking, going to the art gallery that they have. Why does a boat have an art gallery? Why does a boat have a jewelry store? It's so gimmicky and dated. You know, it's like the 90s cruise ship where you can go on and get like a picture frame for your grandchildren. They got to change it if they want to modernize it, because these old people are going to die off and the young people aren't going to want to go on them. So they're going to have to find a way to make it more like appealing to younger people. But I still like them. I still think they're a good choice. They're affordable. They give you the opportunity to go to a lot of different islands or places and then come back to the boat every night. So I like it. All right, everybody, I got to go because we're off to the gym. I will repost this on YouTube if you missed it. If you didn't get your questions answered, I go live every Tuesday, Thursday, and Sunday at 10 in the morning, Eastern time. So thanks for watching. Thanks for following. I started doing this thing where I go on and I look at how many new followers we got before I log off. 56 new followers this morning from the live. So thank you, everyone who's joined. Thank you for all the new followers. Have a good day. Thanks for watching, and I'll see you later. Bye, everybody. I got to sign off first, I guess, huh?